checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what is going on, y'all? JTrades here, back with another brand new video. And in today's video, I will be going over whether or not we as traders should just set and forget our trades, meaning basically the trade either goes to our stop loss or hits our take profit, or if we should be actively managing a trade. So comparing passive ways of managing trades, which is setting and forgetting, versus the active way, and which way is best for you. So now, the short-term answer, honestly, to this is it depends, okay? It depends mainly on a few factors, and that's gonna be the things I'm gonna be going over in today's video. I think I'm gonna start doing more of these kind of videos in the future because I think these videos are gonna be helpful for a lot of traders, basically in terms of the psychological aspect of trading, in terms of, you know, letting your trader or your big wins run and letting your losses short. So basically, that's gonna be exactly what I'm gonna be going over to this video. So for me, personally, it depends, okay? Are you a day trader, scalper, or swing trader? Those have a big impact on whether you should be actively managing your position or passively. Personally, in my opinion, from my experience, I don't swing trade as often, but sometimes when I do, it hits really big. And for me, swinging honestly really is something that I just set and forget, right? In my opinion, swing trading should be something that you should set and forget and not mess around too much with, especially because when it comes to swinging, you're looking for these big moves, and these big moves will have periods of drawdown or periods where your profit P&L will be down, okay? And then eventually goes back up again to even more profit. So for me, from my experience, swing traders, definitely I recommend setting and forgetting. But of course, when you're setting and forgetting, you want to make sure your profit targets are realistic targets. Well, make sure based on backtesting data. So this is stuff you really need to backtest and continue focusing and learning and improving your trading system, okay? To determine whether or not your take profit levels are going to be hit. If they're not going to be getting hits, then what's the point of having those levels in setting and forgetting? Now, if you're a day trader or scalper, someone like me, which is mainly what I do, is scalping the big intraday moves, like big moves. I'm talking about like these big moves up and down, playing these reversals. Then in my opinion, I think it really depends again on your backtesting and your data. A lot of this depends on how much and how well you know your trading system and how well you know your trading edge. What is your typical win rate? What is your typical risk reward ratio? You should know all of these numbers in your head, okay? Like you should be able to know these immediately when someone asks you, what's your typical win rate with your system? What's your typical risk reward size? What's your typical winner's size and your typical loser size? What percent you're risking per trade? These are things that you can only get from backtesting and forward testing, meaning trading live and executing and looking back upon data. This is why, in my opinion, data collection as traders is so crucial, because it really will help you improve as a trader much more faster than if someone that just blindly, follows signals or just blindly trades without even understanding their system themselves. So for me personally as a scalper, right, I've backtested this a lot, and this is just based on my personal backtesting data that I've collected. I found that, in my opinion, we should be actively managing our trade. And the reason why, in my opinion, is because when we're setting a trade, let's say, for example, we are looking into a demand zone, okay? So let's say, for example, let me find an area of price where we can make an example out of this. This is perfect right here, okay? This right here. So this is what I call basically using historical data and present and real-time new data, okay? We're using old data and new data when we're actively managing a trade. Let's say we have a supply zone right here, okay? So we have a supply zone right here. We're just gonna call this our supply zone. Now this zone is drawn based on previous historical past data. So that is similar to something like people do a setting and forgetting. They would place a limit order within this zone and let it play out. Now for us as active traders that actively manage our positions, we know we want to be looking at past data, but as well as present and future data that comes out. So new candles that form, right? We want to be looking at the price action that's going into this zone. If price is being accepted into a zone and price is being able to push through a zone, there's no point in placing a limit order there, right? Because you can see that this zone is going to get invalidated very soon. It's not looking very good. But when we're looking at live price action, we're able to determine this, whether or not the zone will be broken through things, for example, momentum, looking at candle wicks, looking at the strength and volume. But when we're setting and forgetting, that's content in this data that we're missing out on, we don't know about. So that is basically the pros and cons. The pros obviously for setting and forgetting is less stress, right? Less stress trades, less time looking at the charts. You set take profit, you set a stop loss and let it go. But you're not maximizing your profits or winners in a sense in your win rate, because you're gonna definitely lose a lot more when you're basically setting forgetting as if you're actively managing your trade to maximize every single trade to its potential. So me personally, I like to look at historical data. For example, drawing this zone is based on historical data, and then looking at present new data, which is these new data candles that we see that are forming live, going through this or into this zone. So that's why I strongly believe we should be actively managing a trade. So for example, the aspects of actively managing would be, for example, let's say price action is very good, and then we see a break of structure within this zone. Now, this is a lot of stuff that will be going very in depth into my course. If you guys are interested in learning how to learn these strategies by yourself and implement these to your own trading without having to follow signals and all that stuff, I do give out signals as well as a VIP membership in my Discord. Discord is free, by the way, but if you want signals, those are paid. Again, very profitable signals for those that are interested, but nonetheless, that's something I do teach and go more in depth into my course. So basically right here, let's say we have a break of structure here. That is what I consider new data, okay? So old data will be this supply zone based on previous data and what happened. New data would be looking at a break of structure as live new data. New data came into the market and we realized, okay, now with this new information, we know we have a break of structure and this is a very valid supply zone we can enter off of. For example, this is just an example right here, right? Raise a valid supply zone right here. And then the other thing that I really recommend is you must have profit targets, okay, ahead of time. And these profit targets, they must be very realistic and must almost always get hit. And the only way you can know this is through back testing, determining what's your typical stop loss size, what's your typical take profit level, how big is your typical risk to reward ratio. A lot of these things will impact whether or not your take profit levels are realistic, and you want to be making sure you're making your take profit levels based on technicals and not your risk to reward in the sense. When I'm entering a trade, before I enter, I know my strategy gives me a minimum of a 1 to 3 risk to reward ratio. Sometimes it goes up to 1 to 9, 1 to 18, something crazy that later turns into a swing trade. But that's something you need to definitely understand about yourself, okay? About your trading system. For example, let's have a take profit level here. Setting this take profit level here without even seeing future price action, that is what I consider basically historical data. Based on historical data, this is an area that we rejected strong and that we may potentially reject again. So you guys can see, this is based on historical data. And I don't really care whether this price action right here, this trade is gonna hit it or not. That's not my point. But basically, we wanna be having these profit targets ahead of time. We wanna be having our supply zone ahead of time. For entries, we want to be combining past data with new data. But more specifically for entries, you wanna be looking at newer data that comes out. New information to the market. For example, a break of structure that happens live. That's when then you get your entry confirmations, okay? And confluences, things like that. So now that we have old data, supply zone, and our take profit levels, and our stop loss is also based on old data. For example, above this wick or above this zone, that is based on old data. Our new data and new information will be break of structure, change of character, whatever you guys want to call it, fair value gap, things that form live that you guys can enter off of as extra confluences. Once you have that, you then want to let the trade play out. You never want to move your stop loss, by the way. When you're in a trade, never move your stop loss. This is not a good idea. I've tried this back testing before. Never move your stop loss when you're in a trade, okay? You would only move your stop loss depending on your system. This is something you want to back test based on each person's strategy. For my strategy, at least that I teach in my course, I only move my stop loss to break even. Well, I don't actually really move my stop loss to break even actually. And the reason why is a lot of things I go in depth into the course based on my market understanding and a lot of things that I've noticed. So many patterns, not really, I wouldn't call them patterns, but things that develop so many times and happens over and over and over again in the markets, right? So I know that when I should be letting it risk free and when I shouldn't, but based on my personal past data, I don't have a stop loss break even. Most of the times I will be trailing my stop loss at a certain point. I'm not looking for a price to go back and we're close to my entry at a certain point. Once price has basically made structure showing me it's going in my way. It should not break that structure again, okay? So again, that's something that's based on intuition, honestly. A lot more screen time and experience is something that would definitely help you with that, determining how to manage your positions actively. Like, when should I move my stop loss? Where should I move my stop loss? Should I make it risk free? How big my stop loss should be? A lot of these things are based on experience and backtesting data and what works for you. So basically what we then have is we have our profit target again, historical data, new data as our entries and confirmation. And then we let the trade basically play out. Another thing I want to mention in trades is actually, in fact, another thing that's really good about actively managing your trades is you're able to see price action live and it's forming live with new information. So for example, in this trade, we can see we have tons of bearish candles on the 5-minute, very big bearish candles, no signs of any bullish candle. This means price is going in our favor by a lot, meaning price is very, very likely to hit our profit target and even potentially even further down here. Who knows, right? So reading this new momentum and how price action is moving, how a structure is being made, consolidation or whatnot, is going to help us in terms of whether or not we should hold this trade longer or if we should cut it short. So that's stuff that you won't be able to see when you have a set and forget strategy where you set and forget. You have a passive trade. You don't have new data that you guys are looking at. You're just looking at historical data. So in my opinion, actively manage your trade, especially as a scalper, is the very best option because you're able to combine historical data with new data. That makes it a deadly combo for many traders. Now, of course, when you're new to trading, a lot of people will make a lot of emotional decisions when they're actively trading, but I highly recommend you should be sticking to your stop loss, sticking to your plan. Once you have learned how to stick to your plan, that is when you can build this screen time experience, learn how to read price action as it develops live. And after seeing a lot of price action develop in your strategy over and over, basically repeating the cycle every single day, you would then be able to understand how you can maximize the most out of your profits and cut your losses short, okay, from new data that comes to the market. But as a beginner, of course, new data that comes to the market is a lot harder for them to read. So that's going to be it for today's video. Hopefully you guys did get a lot out of this. I personally believe this is something that a lot of traders must Google, because for me personally, this is something I really Googled a lot, but I did not see many YouTube videos on this. So I thought this would be extremely helpful for most traders. So in my opinion, again, at the end of the day, I highly recommend actively learning how to actively manage your trades, not emotions, not based on emotions, but based on technical and objective data backtesting. So again, that's up to your job to backtest and know your trading system. But that's going to be it for today's video. If you guys did enjoy, make sure to subscribe, leave a like, and check the course down below if you guys really want to level up your trading game. And I'll see you guys in the next one. Peace.